Hello and welcome to this short video on the US midterm elections, which will happen next Tuesday, which is the 6th of November. Now, the first scenario I want to talk about is a Republican victory, and by that I mean the Republicans would retain control of both houses. Now, if we take our minds back to 2016, you can see the Republicans won a majority in both the Senate and the House of Representatives, and what this meant was that they had ample political power to push through a lot of their plans. This was large-scale tax cuts and also higher public spending. Now, if they retain control of both houses, then I think we could see a preservation of this status quo, and we could see more of the same from what we've seen the last couple of years in terms of the markets. In order to retain the houses, they require 51 seats in the Senate and 218 in the House of Representatives. So these are numbers to look out for when the results are announced. As I said earlier, this means there's more chance of further fiscal stimulus, possibly further extension of the debt ceiling higher, and perhaps most importantly, less chance for further investigation into Trump and possible impeachment. You could summarise this by saying overall it's more business friendly, and therefore it could be seen as positive for stocks and positive for the US dollar. Now, I just want to show a quick chart of seasonality during midterm years. So this is the S&P 500 or the US 500 on X station going back to 1950. And what you can see is quite surprising that during midterm years, such as we're currently in, the market has actually been pretty flat for the first 3 quarters. And bear in mind also, since 1950, we've seen a very strong push higher in stocks, so most years would actually have positive performance throughout. But what's interesting here is there's been a strong move higher in the final quarter during midterm years on average, going back to 1950. Now, an interesting thing here is it's not just when the incumbent party has retained control of the houses or gained extra control in the 2 houses. It seems kind of regardless that we've seen a strong move higher, and it could possibly be just a fact that the uncertainty leading up to it is gone, and then once everyone knows what the state of play is, they feel more confident piling back into the stock market and pushing it higher. Now, if we turn our attention to the charts, I'm going to start off with the US 500. This is a weekly time frame. You can see going back to the 2016 election, we've had a strong move higher. The market traded a low around 2030, the night of the US election, and it's rallied very strongly with gains up to the all-time high seen just a couple months ago, about 45% higher at 2946. We have had a pullback in recent weeks, but at the moment the low of 2,603 is comparable to the 12% drop we saw earlier this year, and broadly speaking the uptrend does seem to remain intact. We've got a series of higher highs and higher lows at present, as long as we don't drop below 25.30, and if we do get a positive market reaction to these midterms, then we could see a rally up into year end. Looking at the US 30, you can see this arrow here denotes the US election, and here I've drawn on a 200 period SMA on a daily time frame. You can see we've moved strongly higher. For the vast majority of last year we were above the 200 SMA, and we have been for most of this year, but just recently we have dipped below it, and this SMA itself is potentially starting to roll over. It currently resides around 25,080, and I think if we do get back above there, then we do negate this negativity and we could continue higher. But if we do drop down below these recent lows, then you could see falls to these 38.2% fibs coming in around 23,325 and possibly even further, with a larger decline possibly targeting this 61.8% fib, which you can see was a bit of a swing level before, around 21,080. Now, the majority of the selling, or the worst selling in recent weeks, has been in tech stocks. You can see this here by the market dropping almost already down to its 38.2% fib of the rally seen since the 2016 election. That 38.2 comes in around 6525, but we have had a little bounce the last couple of days. Again, we spent the vast majority of the time above the 200 SMA for the past couple of years, but we have dropped down below it in recent weeks. If we do get back up above here, then I think the outlook becomes a lot more positive into year end, and we could see another attempt at these all-time highs at 7735, but if it does fail and stay below here, and you can see the SMA has levelled off, then it could spell an end to the current uptrend. Now, gold is one of the most sensitive markets when it comes to US political developments. You just have to look at the move we saw in November of 2016. This is a daily time frame again where we had a large inverted hammer and then several days, weeks of large declines following. But broadly speaking, the last couple of years have really been a range trade for gold, with these highs coming in around 1365. We did look to break higher earlier this year, but were met with a double top, and lows coming in around 1122. We are just below the middle of the range at 12.16 presently, but as you can see with the 200 SMA, there's no real clear up or down trend in play. It's more been a range. The US dollar index is at an interesting level heading into these midterm elections. You can see back in 2016 we had a positive reaction to the Republican victory and a strong move higher, but then the market faded after a couple of weeks and had a prolonged slump. We are now back almost at the similar sort of levels that we saw around the 2016 election, close to the highest levels of the year, around 96.85. And if we can break out to the upside with a Republican victory and get some positive dollar moves, then we could see a push back up to 100 and possibly even towards these highs. Finally, I just want to talk about the US dollar Mexican peso. Now, leading up to the 2016 election, a lot of people called this a Trump trade because of the dual aspects of positive US dollar and negative Mexican peso if he were to win. And you can see we had this huge rally of around 17% higher on the week of the election back in 2016. Since then, the market has dropped down, and similar to gold, we've kind of seen a range trade, but just this week we've seen a strong move to the upside. I believe Monday was the largest rally we saw in a single day since 2016, and this has really come in on the back of negative Mexican news actually from political developments there. But if we do see US dollar strength on the back of a Republican victory, then we could get further gains up towards this 20.95 level, possibly even 21.35. Okay, thanks for listening and best of luck if you're trading over the midterm elections.